Hey, what's up guys, how you guys doing? In this video or this module of the course, I'm gonna be going over trend. Okay, trend is a very important topic when it comes to deciding whether you want to take an entry and you don't know exactly what direction the market might go. So I'm gonna explain it to you a little bit better in a more simplified way in order for you to realize and to identify, more importantly, what trend are you on and what can you expect off of that trend. Okay, so let's get to the video. Okay, so as you guys can see, we are in trading view right now. As you guys can see, we are in a gold trading view chart. So in this scenario, as you guys can see, gold is showing a very bullish structure. Okay, bullish structure means that the price is going to the upside, and bearish structure means that the price is going to the downside. Okay, so I want you guys to identify or be able to identify what a trend is. So a trend is basically deciding if the market structure is either bullish or bearish. If you are a completely newbie when it comes to trading, this is something that you might find a little bit of difficult to understand at the beginning, because it happened to me at the beginning as well. But trust me, once you get this over with, it's going to be very easy for you to catch your setups. Okay, so for example, if let's say if you are in a bullish market as of we are in right now, you want to be chasing buys instead of sells. Why? Because we are in a bullish market, meaning that trend is going upwards and you don't want to catch a sell when the trend is going to the upside, because the chances of you getting hit on your stop loss are very high, other than if you were to go to the upside. Okay, so I'm gonna explain this a little bit better in a way that I can make it more understandable for you guys, and especially for the ones that are very new into trading. So I'm gonna try my best on explaining how to identify the trend on a market structure. Okay, basically this is very simple. As you guys can see, we are in a bullish structure. Why? Because we can see that the price is moving upwards. As you guys can see, I'm gonna draw these lines right here, and we are in a bullish market structure. Why? Because we have higher highs, higher lows, higher highs, higher lows, higher highs. The reason why I would never suggest to catch a sell on a bullish market structure is because of the risk to reward ratio and the chances of the price getting hit on your stop loss. The chances of you getting a buy on a bullish market structure are 70 to 80% way more accurate than if you were to catch a retracement sale on a bullish market structure. What do I mean by that? I mean that if the market is doing this on a consistent basis as it's doing it right now, if you guys can realize, this diagram is basically the same thing as whatever is going on with gold right now. It's basically the same thing, just it's not going to be perfect. The market is never going to be perfect, but it's showing you the same image in a different way, right? Okay, so I'm going to explain this a little bit more in depth for the people that are brand new. If we are in a bullish market structure, we have higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Okay, so whenever we have a new higher high and it becomes a new higher low, we are going to be expecting price to retrace from that higher low up to the next, or create a new higher high, which is whatever is happening on this scenario right here. So if we have a higher high and then it becomes a retracement up to the next higher low, and it respects the price and it retraces, what are we expecting it to do? To create a new higher high, because we are in a bullish market structure, right? So what I would do if I were to take an entry on a retracement on a higher low, I would expect the price to retrace up to the next higher low, respecting the previous higher low, and then I would take my entry from there. And in the next two modules of this course, I'm going to explain to you how to catch these retracements with the Fibonacci tool, but I'm not going to go over it right now because I don't want to overcomplicate things for you guys. Okay, so if I were to catch this retracement, I would expect price to reject and respect the previous higher low. Okay, so if it respects it and it rejects or it retraces a little bit better, I would take my entry like around this key level right here, and my stop loss would be a little bit under the previous higher low created, which is this one right here. Okay, so I would expect price to break above the previous higher high and create a new one, which at this point is this one right here. This is just an example, like I just created this diagram, but I just want to let you guys know how easy this is once you master it. Okay, Trend is very easy. It's not complicated at all, but this is just for the newbies that doesn't really know how to identify these higher highs, higher lows. Basically, a higher high, I'm gonna explain it to you a little bit better. This is a higher high, and this is a higher low. Why? I'm gonna explain to you what, guys, why in a minute. I'm trying to do this just for the sake of this video, and I want you guys to be able to understand it as well as I do, because when I started trading I had always like a lot of doubts, and I feel like this was one of the most frequent questions that I had at the beginning, which I didn't understand up to like I had like 1 year trading. But yeah, this is basically what I mean by that. A higher high is created on a bullish market structure, and a higher low is always going to be higher than the previous low, but it's always a retracement. And then after a higher high, it creates a new higher high. After a higher low, it creates a new higher high. And what happens after the higher high retraces a little bit, it doesn't mean that the market is gonna switch the structure. It only means that if it retraces no lower than the previous higher low, and it respects that retracement and goes to the upside, that means that that was created, a higher low were created there. So we are expecting to create a new higher high a little bit above of the previous higher high. Okay, so I hope this really makes sense, guys. This is very simple, and this is just in a bullish market structure. Let me put it right here just for you guys. We are in a bullish market structure. Okay, this is a bullish market structure, so we are going to be looking for a bearish market structure, just so I can explain it to you guys. This is the explanation for a bullish market structure. I'm gonna take a picture, a screenshot, then I'm gonna delete everything. Well, I'm gonna leave it in there just for the sake of this video. Now I'm gonna go back and I'm gonna look for a bearish market structure just for you guys. Okay, we found one. Okay, so in this case, as you guys can see, price is moving downwards. It's bearish. This movement is called bearish because it's going to the downside. Okay, I need you guys to understand all of this vocabulary. Okay, so in this case, as you guys can see, we are going downwards in the market. Price is actually respecting the bear market. So as you guys can see, it's very different than the bullish market structure, because now at this point we are going to the downside. Okay, I want you guys to understand that and to get that. So in this case, what the market is doing is this. It's creating this type of market structure. Okay, so in this case, okay, so in the case of a bearish market structure, we have, instead of having higher highs and higher lows, we have lower highs and lower lows, because the market now is going to the downside. So this would be considered a lower low, and this would be considered a lower high, meaning that the high is lower than the previous higher high when the market structure shift happened. So after a lower high is created, then the next thing about that means that it was a retracement up to the, that is going to continue going to the downside, which is going to create a new lower low, as this example right here. A new lower low was created, and after that lower low is created, what's next? What's gonna happen next? A new lower high is going to be created. As far as the lower high respects the retracement and it doesn't retraces more higher than the previous lower high, then at that point it's a shift in a market structure. But since that in this scenario doesn't happen, we are respecting the previous lower lows and lower highs. This is considered a market structure. Okay, I want you guys, this is going to be really easy for you guys to understand once you guys get it, but this is the best thing, or for me the best way to teach it. Lower low, lower low, then we have a lower high, lower high. Okay, so that means that we are in a bearish market structure. So in this case, we would not be looking for buys, we would be looking for sells, because we want to catch the sell to the downside, because remember, trend is your friend. So we want to catch a sell on a bearish market structure, and we want to catch a buy on a bullish market structure. This is very simple, guys. Don't overcomplicate it. Remember this, write it down and look for it right now. After you finish this module, just go to TradingView and start identifying market structure. So whenever you see a bearish market structure, I want you guys to memorize the word sell. Bearish market structure means sell, and bullish market structure means buy. Simple as that. Don't overcomplicate it. And how we would take an entry on a bearish market structure is we would wait for a retracement to the upside, and after the price respects the previous lower high and its continuation to the downside, that's where we would place the trade. Okay, so for example, we are in a bearish market structure and price rejects at a certain support level. Let's say that this is a support level, okay, and then price rejects, boom, and it respects the previous lower high. It doesn't go higher than that. Other than that, it would have been a new higher high, but since it's respecting the bearish market structure, is not going to go over the previous lower high, so it's going to create a new lower low. So after the new lower low is created, it creates a new lower high, respects the previous lower high, and then it comes right back down to the new lower low. So at this point, I would be placing a short position after the price makes a little bit of retracement and then a continuation to the downside. I would place my stop loss a little bit above the previous lower high created, and I would target a little bit under the previous lower low created. As of this point, this would be the perfect entry. Okay, I want you guys to memorize this. I want you guys to write it down if you can. I want you guys to actually practice this. After this module, go right back to TradingView and start identifying market structure, lower lows, lower highs, higher lows. And I want you guys, this is very crucial in the market, guys. Please take it into consideration. And after you do that, just like I said, go back to TradingView and start trading demo and start getting in your feet in the water and actually start taking some trades on your own. Okay, we are a little bit more advanced than the basics and the fundamentals of the day trading. So at this point, you should already have an idea of what's going to happen in the market and whether to identify a bullish market structure or a bearish market structure. Okay, so this is it for this video. I hope you guys liked it, and if you do, just stay tuned, write everything down, everything that you can, and I see you guys in the next module. Bye bye.